Hello and welcome to Wealth Within's weekly hot stock tips, where we dive into the hottest stocks on the ASX today. Now, I'm Philip Tortevsky, Senior Analyst at Wealth Within, and joining me is Analyst Pedro Banales. Welcome, mate.
Phil, how's it going?
Very good. Another week, interesting week on the market.
Oh, mate, I feel like a kid in a candy store. There's so many good stocks out there ready to run and running at the moment.
Yeah, I mean, we've broken to a new all-time high. As you said, there is a broad depth of market stocks. I mean, across all sectors running at the moment through reporting season. So let's get straight into it. On your screen right now is a watch list of the top 200 ASX stocks. And I mean, as we mentioned, obviously this month you're going to see a lot of these double-digit type returns. Given we are in reporting season, computer share reported. Look at that, flying absolutely. But I mean, it's given plenty of opportunity back through November to get involved in this one, I would argue. Now, if you're looking at it today, well, I think you've missed the boat, to be honest.
Extended, yeah.
But anyway, going through the list, you've got Nine Entertainment. That's starting to show some signs of life. Very interesting. I'd keep a close eye on that.
Definitely.
Charter Hall, a REIT through there, Light and Wonder, Champion Iron, Helios, again, Star Entertainment Group. We're getting...
Bit of
have a look at that.
It's probably the same Hong Kong buyer, just topping up.
Yeah, quite interesting. I mean, I'll probably be staying away from that still for quite a while. But anyway, Mirvac Group, another few of the REITs coming in. That could be, in line with the potential that now we are looking at this rate cut coming soon. And we're going to get into that because there is, the hot stocks right now are the banks to be speaking about, given the rate cut is literally tomorrow. Quite interesting. But obviously, Mirvac Group, another one. John Ling's Evolution Mining going through the list. And we're getting, FBU, so predominantly dominated by, finance, REITs.
Industrials.
Industrials at the moment. Quite interesting. Now, on the flip side, what we do have is the healthcare sector, which is getting hammered. And it's quite disappointing, to be honest. I mean, CSL down 4.8%, Cochlear down 15%.
Yep.
AMP, this is an interesting one. It had been rising quite nicely, reported, and got dumped. But again, when you're looking at that, it's in a beautiful uptrend since December. So we're going to get into that one shortly
the
as well.
overall scheme of things,
Yeah, we'll dive deeper on that one very soon. But as you go through the list again, pharmaceutical, so healthcare and energy. Energy is starting to find its feet, but still struggling a little. You've got, AGL, that also reported, I think, down 8%. You've got Telix Pharmaceuticals, you've got Whitehaven Coal, you've got Yancoal. Karoon Energy, that's down 5%, but I mean, starting to look quite, interesting. If we go here on the weekly chart, although it is down, this is it, make or break time here. If this one can hold, it's bouncing twice now with higher bases.
It's sticking to that trend as well.
It's a bit interesting. Let's see what happens this week with those players. But, as we go down through the list, double digits, which is quite normal during this period. You're going to see heightened, and as we said, obviously, it's that healthcare and energy sector which are lagging a little right now. So what is hot in the market this week? Well, on your screen right now is my hot stock tip for the week, which is Commonwealth Bank stock ticker code CBA. Now, this one, Pedro, everyone knows about, and it's been the hot topic of the recent weeks. I wanted to bring it up because we are due for a rate decision tomorrow. Potentially a rate cut is being priced in on the table. The banks have dropped their rates. And so how does that play into the longevity of this particular company here? It is one of the biggest players on our market. It drives the whole index. And
I have to say that lower interest rates is usually negative for banks because it lowers the spread, right? But at the same time, it might increase loan and, investor activity. So, it's a double-edged sword at the same time.
Well, I've always looked at it like that. I'm thinking if the banks, are dropping rates, you've got to ask yourself, well, why is that? And if the RBA, let's say the RBA doesn't cut tomorrow, well, it could be because the bank, they're trying to drum up business. Business might be slow. And so that is not always a hugely favourable thing. But anyway, if we go back to the chart to have a look, I've marked a few things on this one, and although I have it as a hot stock tip, I'm going to caution that because it is potentially a hot stock tip for a short-term opportunity. I'm not thinking a long-term opportunity on CBA at all, especially in light if we do go through another easing cycle, as you've mentioned, Pedro. But I just want to show something in terms of what we're looking at here. And if we measure now we're on a monthly chart here, this is the basically whole history of the stock. If we measure the 5 last rises on this particular stock, we've gone up over 169% back in 2003. That was during the, just before the GFC run. And the run of gradient of rise was about 58 degrees on this grey line that we've got through here. We went up 149% in 2009. The degree of rise was 79 degrees before we experienced a bit of a pullback. As we follow on through, in 2011, we ran up for 128% on a degree of 65 before we experienced the pullback. Following that, the COVID fall in March 2020, we went for a short run of about 77 degrees where we ran up about 100% before we experienced this huge sideways period. Now, we're running at 80 degrees.
Yeah.
All throughout the history, this is the sharpest run Commonwealth has ever been on.
Ooh, that's
okay.
Even before GFC.
Even before GFC. So when you see things like this, to me, that starts to say, okay, we're at the mature stages of this particular run.
Yep.
And 80, the sharpest run on a stock trading at all-time highs is more, from my perspective, cause for concern than cause for excitement.
Yeah.
Now, that being said, I have marked it as a hot stock tip, so I've got to say something good about it, right?
Yeah, got to perform a little.
But why it is looking good right now for a short-term opportunity, because as it's running through, I mean, you can look at stocks and they're at their all-time high, but you got to ask yourself, what is it doing at that level? How's it getting there?
Yeah.
Is it moving to that all-time high in this nature, following 7-8 weeks straight up? Or is it, moving at an all-time high and it's experiencing one of these periods through here where it's accumulating sideways?
Yeah.
That's the conversation we've got to have right now.
Yes.
We're coming out of an all-time high touch, but the stock finding a base, and rather than falling away, it's showing strength by accumulating sideways. We saw previous example of that happen through here. When they break through to new all-time highs, they're not doing it in a fashion where, 5 weeks up and then falling away. Sellers have had their opportunity to get involved. They haven't been able to take it lower. And typically, at new all-time highs is when sellers do get involved.
Yeah.
So that is a clear, indication that price wanted to go higher, broke out into trend, and look at that. If we're looking at a move today like that after 4 or 5 weeks up, I would expect a pullback. So I would say maybe no, but we've broken out basically out of a holding pattern. So we've broken up. So from a short-term perspective, there is opportunity for this stock. And generally what can happen is, if we just zoom this up, we can get a run from when you're looking at technicals to mirror what happened prior to the breakout. So if we measure that breakout and look at it all on the way up, whether it's from here or from here, we've potentially got a run up to 190, between 180 to 190.
Yep.
So from a short-term perspective, there is an opportunity there. But as I say, from a long-term perspective, we've got 1, 2, 3 angles where the trend has steepened. And as you rightfully mentioned, you get to 3, 4, 5, generally that's the end of the run.
Yeah, exactly.
So right now, Commonwealth is a short-term proposition. Although it is a hot stock tip, it is going to be volatile because obviously the interest rate decision is going to play into that.
Yep.
And it is a stock that, most people do have. So I would be watching this one closely. And, we've got this nice momentum line through here. So it's something to give you an indication. If we do break up and news turns or the market decides, okay, that's enough, well, watch these momentum lines. If we break through here, then the more medium-term player might be looking at this particular level through here. The longest-term player might be looking at this gradient of rise. If Commonwealth breaks through, we might be finding support back at about $153. If we break 153 and we get through 142, then I would argue the long-term momentum's changed on this one.
Yeah.
And it's a cause for, hey, stay away until you get further confirmation.
And for that to happen, we would need to see some pretty big moves on the market, right?
Well, Commonwealth especially,
it's number one or number 2 in our market.
Yeah.
So
But it has gone up so much. It's gone up over, 50% compared to the rest of the stocks out there. Yeah. It's one of the best performing stocks over 2024.
Amazing.
And it's the biggest stock on our market. So,
but it's been held back by the miners. I mean, the market overall. That's the shame of the things. But stock has performed spectacular.
Yeah. So at some point, what goes up must come down. But anyway, that is it for Commonwealth Bank. Now we're moving on to a stock that should make you proceed with caution. AMP Limited, stock ticker code AMP. All right, now, with this one.
Opportunity or a failed run?
Yes, very interesting question you've just posed there. And that is what we're talking about here, because it's reported and it's not reported. The market has not taken kindly to the reporting.
Yep.
But what was interesting from a technical perspective, it was coming into this resistance at $1.80.
Yeah.
Previous levels here were price congested, failed there and failed there. Also failed just a bit higher in November 2019. So we are looking at a scenario with AMP where it's, for me, at a line in the sand moment. What's promising about it is the fact that if you measure this whole downtrend, this period from November 2023 to what we've seen today, that's the longest this market's run up and strongest all throughout this move through here. So when you want to talk about buyer-seller relationship, buyers are now dominating. That hasn't happened for the best part of 7 years.
Yeah, great point.
So that is a nice change in sentiment. I like that.
Yeah.
But we are near lows. We're having a nice bounce through there. This is the telltale sign. If we hold on this momentum line, or if we hold above these levels here, which is another important level of support, we hold $1.40, we hold momentum, and we start to rise up. We break $1.80, then I would say, okay, bullish trend, early stages, buying opportunity.
And long term as well.
And long term.
Yeah.
We fail on the back of the reporting, and we start to take out that momentum line or the support line that we drew. We start to flicker around $1 again, then I'm getting worried for AMP long term.
I reckon, it's really like with the lawnmower when you're trying to start it and it just won't start, So that's personal experience. But anyway, but it could still present a very good opportunity, like you've mentioned. So again, we'll just draw these gradient lines here. And one concerning thing that I would have to say is that, we do see these gradients of rises, and it had this one here, then shot up onto this new gradient, but then it's actually broken this one. So, worst case, it could be coming back to that earlier gradient. And like you mentioned, those resistance levels before, around that $1.30, $1.40, I would actually argue $1.30 is more likely, could present a level of support. But at the moment, I'd just be watching this one. But like you mentioned, it's a great opportunity, medium to long term, if it gets going again. Yeah,
if it can hold. I mean, really, like you said, it's that line in the sand moment. And it's beautiful because as a trader, I mean, you've got those very clear lines that you're looking at, and these are the levels that are going to be make or break for this stock. I mean, it doesn't get any more perfect than that, right?
Oh, mate, it doesn't. Yeah, it's very technical, this stock.
Yep.
It's great.
Fantastic. All right, well, lastly, what's not hot in the stock market this week? Well, CSL Ltd, stock ticker code CSL. So again, another one with, if you look at the weekly chart, I mean, huge volatility to the downside. And you've had warnings. I mean,
it's been falling for since when?
Since August 2024. But not only that, look at the way it is falling. You had this, I mean, it showed a lot of promise on the 27th October. Let's be fair with that. But what's quite interesting is that it is stuck sideways. On the big picture monthly chart, $314, you don't need to be a rocket scientist to work, to get a very clear gauge that this stock is stuck sideways. $314 and to the downside $242 is where it is generally finding support. A very clear display that buyers will not accept prices above that, and sellers are willing to pick it up at these levels. They're saying it's good value at $242.
Yep.
So right now it is my not hot.
Yep.
Tip. Unhot tip but it is moving to this 242 level. So there could potentially be an opportunity to pick it up. That being said, you never want to just pick up stuff on support and resistance.
I was going to ask you.
No.
Would you pick that up purely for support?
No, look, I mean, let's answer that in two ways. It all comes down to the risk profile of the trader or the investor. If you're willing to accept that it's a high risk play and you do it and you're comfortable with that, then no problem. But if you're looking for the safer, the more profitable, the higher probability trade, where you've got a higher chance of making money, that's your goal, and everyone's goal is to make money, right? Well, then you'd wait for confirmation. And if we go back to the chart of CSL, you can see that on the weekly chart, even on each of these examples, you do get confirmation relatively close to the low. So there, confirmation there, confirmation through there. Although you're not picking up this one, you don't get it. It's already shot up. So that's the thing you get when you're trading at, or you're getting to huge support levels. You either wait for confirmation, you risk getting not getting in the trade, or you try to pick it up and you risk getting stopped out on the trade. But regardless, the point is with CSL right now, it is not hot. This week is a very down week. Look at that, closing near the low, or last week, sorry, I should say.
Yeah, high volume.
Huge volume. And so we're heading to $2.42. There's no brainer about that. That's where it's headed if we stop there.
Yeah.
If we start to take 242 out with conviction and close below, or we take this particular low out through here with conviction. And what I mean by conviction is you can see that in the past, they've tested the low, gone below, but then held. Tested and gone below the low, but then the next month have followed through. What I mean is more than 1 month.
Yeah.
If it holds and as it's closed below there, follows on with it, if we get an example like that, then I would say mate, we're in trouble with CSL. There's going to be problems. But
it's unfortunate.
Yeah, because it's in a sector that, you got the aging population, this is one of the biggest players in that particular space.
Yeah.
A big stock held by the big, players, institutions.
Yeah.
But I'm just wondering whether we're getting a bit of that, a lot of money is moving away from individual stock investment and it's filtering into this index ETF space.
Yeah.
And I wonder whether that is kind of, taking flow out of these big players.
It's not being directly directed into the big,
which is interesting. But again, hey, it's a big one with opportunity potentially down the line. But for now, I mean, while it's going down, you've got to stay away.
Yeah, definitely. And when it does trend, it trends beautifully. So look at this period from 2001 all the way up to where's this 2020. So for 9 years, it was just trending up. You would have made a mozza out of this one. So from 2011, that's 1,000% up. So like you mentioned before, and I do agree that, maybe just picking it up just purely by support might be risky. So if you just wait for confirmation and then it does trade up to these levels again, then starts to trend again, well, you've picked it up at a low risk and you're ready for the next run.
Absolutely. And I'll just add as well, if we just zoom this monthly chart out, this is not the first time CSL has done this. If you're thinking, what's wrong with CSL? It's the first time. Well, think again, because back in 2007, this stock went sideways from 2007 to 2012. So 5 years it's gone sideways. Right now, we are tracking on 2020 to 2025. So we're almost at that 5 year again of sideways action. Whether that means something, well, may or may not.
Yeah, we'll soon find out.
We'll soon find out. But all right, well, that is it for CSL. Now, thanks for watching this edition of Wealth Within's weekly hot stock tips. Remember to tune in to the live Australian stock market show on YouTube from 7 p.m. Eastern Time every Tuesday night. Now, to find us, just type Wealth Within Live in the YouTube search. And remember to have your phone ready to call in live to speak to us so we can answer your questions. The number is 03 9290 9988. Or you can email into the show right now by sending your questions to info@wealthwithin.com.au. Now, if you want a copy of Dale's first book, you can still get it for free. You just have to pay the shipping. You can order it from our homepage, wealthwithin.com.au. Now, I hope you've enjoyed today's episode, and thank you, Pedro, mate, as always, for your comments.
Always, mate.
Good stuff.
Next one.
See you next week. All right. Well, thanks for that, and thank you all for watching. For now, goodbye, good luck, and good trading.